Ladies and gentlemen, a very, very good morning, good evening, good afternoon, wherever you are, whatever you're doing. This is Dylan Danicha. Hope you're doing really, really well. I wanted to just drop you a really quick video today, just to round up everything that we've been speaking about. And if you've seen the last two videos, which I hope you have by now, and if you've done the exercise, certainly around calculating debt levels and the impact of interest rates, you will have come up with, I hope, some pretty interesting figures. And the idea is that in order to grow your numbers, so in order to become financially free, financially abundant, in order to take control of your financial future, is really critical to understand exactly the foundation from which you're coming. So far, you should have really looked at your economic ecology. What do I mean by that? Well, I mean, what is your current debt level? What impact will a rise in interest rates have on your repayments? What extra cash flow will you need to pay the bigger bills? And so that there's the bigger bills associated with the rise in interest rates. But if you remember, we also in the video spoke about the impending pressure of inflation that is going to hit us pretty quickly and pretty hard as macro and microeconomic policies really favor a different economic climate. So what the government will be looking to do, what the central banks will be looking to do, is to start taking the economy in a different direction. We've been floating around at rock bottom interest rates for quite some time. And as soon as the elections are over next year, so in less than kind of 12 to 15 months, we will start to see some interesting things happening. Now, we can either be on one side of the fence, which is the side of the fence that is able to benefit from those changes, or we can sit on the side of the fence which really has the most damaging impact on your finances. Because what that means is that you're not looking for extra cash flow right now. You're not looking to secure your position right now. So understanding how you can start preparing immediately is absolutely critical. And that's what I want to talk to you about today. There's a couple of bits and pieces that I'm going to share with you. Really quick video today. And I wanted to do it in this format just so that you've got something to take away with you. You can take notes. You've got it here. So what is the quickest way to catch up? What is the quickest way to kind of get ahead of the current situation in terms of cash flow and debt level? So increasing cash flow, reducing debt levels. But also, what is the quickest way to build a strong and firm and reliable foundation for moving into the next cycle? And that cycle, as I said, is going to hit us pretty quickly. Well, the strategy, the meta strategy, what do I mean by meta? I mean the overall strategy that everybody should adopt is one of copying wealthy people. So I invest in properties, I invest in precious metals. As you know by now, I'm a currency trader. I've been trading since the late 90s. And so my meta strategy is, if I want to be wealthy, coming from a refugee family, I wanted to be wealthy. And so I thought, well, I can do a whole host of different things, but my overall strategy for life has to be, if I want to be wealthy, I should copy wealthy people. And so I came across this concept around wealth and the creation of wealth, and in particular the wealth leverage pyramid, which I'm going to share with you right now. The wealth leverage pyramid, in essence, outlines and describes the ways that people make money. And if you can see at the bottom of the pyramid, the easiest way is just for me to bring the labels up to show you. At the bottom of the pyramid, it's kind of where the majority of the population are. And what the majority of the population do is leverage time for money. So they swap time for money. And I don't know, but you may be in this situation too. So you may be in full-time employment, or you may be in a business where you are perhaps swapping, I'm going the wrong way there. You may be in a business where you may be leveraging services for money or goods for money. In essence, those three levels all sit very much at the bottom of the pyramid. So you're either in a full-time job, or you have a business where you're perhaps a consultant and you're leveraging your consulting services for financial payment. Now, here's the thing, as a corporate consultant myself, kind of around about 10 years ago, I also was leveraging services for money. All that really meant was I was just able to able to charge a slightly higher daily rate than everybody on PAYE. So in essence, whilst I felt like I was in a different league, when I looked at the hard facts, I was still swapping time for money. And I've had other businesses where I've looked at swapping goods for money. So technology businesses, I've been an investor in technology businesses, in particular the early tranche of SMS marketing services. Now, so what I mean by that is, the multi-sender SMS campaigns that people do, sending out 100 or 1,000 or even 10,000 SMSs at a time. And we were doing this way back in 2003 as almost kind of a bit of a side investment to the trading. Now, the thing with that was we had to make investments in technology, we had to make investments in kind of bulk stock, if you like. So we would go out to the marketplace and buy in the order of 1 million or 1.5 million text messages. We then moved into Bluetooth marketing. And so the company asked for more investment. And what the company said was, look, we've got these units and we can send out these adverts via Bluetooth. But of course, then what was I doing? I was investing in hardware and technology. So leveraging goods for money is, in a sense, you're either leveraging other people's time, so employees' time for money, or what you're doing is investing in technology and stock and overheads and resource. So the wealthy don't do these things. The wealthy invest in companies that do these things, but they don't do these things themselves. How the wealthy make money is by leveraging money for money. And so where in the past I may have been selling the SMSs myself, now I'll invest in the company. Where in the past I may have been contracting out my consultancy services, I will be leveraging the time of expert coaches and trainers. What I do, and what all wealthy people do, sitting at the top of the pyramid, is leverage money for money. You put money into a vehicle and then you pull more money out. You pull out a return on that money. Now, of course, there's all different vehicles in which you can do that. So you can invest in companies, or you can invest in properties, or you can even invest in precious metals. However, the very quickest way, the method, the vehicle that got me to a position where I'm now able to, invest in the order of £625,000 in young entrepreneurs across East Africa, as well as develop the property portfolio, as well as create the precious metals portfolio and the commodity plan out in Switzerland. What allowed me to do that is trading in the currency markets, and with very, very small startup capital, with regular returns, you can do absolutely the same. And so this is one of the big myths about trading, that you need big money to start, you need to make big returns, and that's the only way that traders get wealthy. Well, here's a little secret that many people don't know. It actually is the opposite. Start small, make small, regular returns, and watch capital grow. So let me give you a numeric example. By now you probably know that I love numbers. I love explaining things in numbers, because numbers for me, numbers don't lie. So let's have a quick look. And so what I'm going to do is give you an example that if you started with £100 and you grew that £100 at just 2% per week on the markets, and I've got systems and strategies that I'm going to share with you where you can do that all day long. So £100 at 2% per week. You stay disciplined. You don't try and go out and get more. You don't try and go all in with as much money as you can right at the beginning. You start small. You make small returns each week, but consistent. Let's have a look at how that looks over a number of years. So by the end of year one, you've nearly 3 times that initial capital. So you've grown to £280. That's £180 you've made. Doesn't seem like a huge amount, sure. Working 52 weeks for £180 doesn't in real terms seem like a whole amount. But here's the thing, that we have to look past the actual value, and we have to look at the growth, because that's what compounding is about. Compounding is about growth. So in the same way that, the low interest rates fool people into the debt cycle by encouraging them to take out more debt. And I don't know, maybe you've taken out more debt whilst interest rates have been low. Maybe you find yourself in a position where you're now kind of weighed down by that debt. Well, here's the thing, that in essence, the low interest rates are it's a bit of smoke and mirrors, because ultimately when interest rates start to rise and the length of the term increases and increases and increases, what's going to happen at the end? The banks will still make twice as much money from you as they lent you. That's always the notion of the banks. It's the primary aim of the banks is to lend money out and then make double back, if not more. So that's what we're doing right here. What we're doing is turning the tables on the system, and what we're doing is using exactly the same formula as the system uses. The system doesn't take a 1 month or a quarterly or a 6 monthly approach, or even an annual approach. The banks are looking at long-term profitability. Hence, they are very much looking at 25, 35, 40, even 50-year mortgage terms. And that's what we've got to do. So it's small growth regularly. £100 at 2% per week at the end of year 2 is £784. At the end of year 3, that's nearly £2,200. And remember, it doesn't matter what currency you're trading. I'm based here in London, so I use pound sterling. But I do a lot of work with guys over in Dublin, do a lot of work with guys over in Europe, do a lot of work with guys out in the States. And so it doesn't matter what currency you're using. You could be using euro, you could be using dollars. The growth rates are exactly the same. At the end of year 4, that £100 growing at just 2% per week is now £6,149. At the end of year 5, so now the human brain starts to tune in, because now you're seeing 4 and 5 figures. And so if you perked up when you saw the £17,000, well, here's the thing. What we need to do is kind of desensitize the brain from seeing 5 figures as the big one, because the growth is exactly the same, but it's a pretty nice figure, isn't it? £100 at 2% per week, £17,000 in 5 years. By the end of year 6, that's now £48,000, or just a touch over. By the end of year 7, that £100 has grown to £135,000. Now that's substantial growth. And when you now look at it in that frame, where £280 at year 1 didn't seem that great, £100 growing at 2% per week for just 7 years is now a very substantial £135,000. At the end of year 8, that compounds to £378,000. So here's the thing. Compounding doesn't care for starting capital. It doesn't care for people going out and trying to get as much as they can as quickly as they can. Compounding is the magic behind everything. Whether you're looking at a fitness regime or a nutrition regime, or whether you're looking to better your relationship, I'm an absolute fan of compounding. And I'm fastidious about compounding in every area of my life, specifically and particularly financial. And so compound is the magic to becoming super wealthy. And it only really cares about time. So with compounding, it doesn't matter how much you start with or what rate you grow at. It only matters that you start now. Compounding only cares about time. What I'd like to do, guys, as a real thank you for kind of sticking with me for this session and a couple of videos beforehand. Hope that you got a ton of value out of that. Hope that it's got you at least to think about wealth creation in a different way. Or if you'd already thought about trading, has kind of reinvigorated you. I'd like to invite you to a free training session. It's called Learn the Secrets of Doubling Your Money Just Like the Super Wealthy, with a 3-step Child's Play comic book trading system. Why is it a comic book trading system? Well, it's all around shapes, patterns, and colors. So the people that I have in my traders community, they've all got day jobs, or they've got charitable projects that they're supporting, or they're full-time carers for family members. Everybody's got something to do, and therefore, sitting in front of the charts for 6 or 8 hours a day is not ideal for them. Engaging on really technical, complex trading methodologies, which, by the way, don't really work that well anyway, is not really for them. If you're looking to grow cash flow, if you're looking to build that foundation, then here's a methodology that I'm going to share with you that you can do in an hour a day when the markets are closed at the end of the day. And it uses shapes, patterns, and colors. On the training, you're going to learn how to save yourself from the systemic debt trap that we've already talked about in the first couple of videos. And that's secretly wiping out really any chance that you have of financial freedom. And that's the sad thing, that what's happening to people across the world is it's happening in secret. It's like the unseen, odorless gas that consumes you, and it's consuming people's finances. I'm going to show you how to spot under the belt punches that are being thrown at you right now by the banking sector, and also how to turn the tables on what I call today's playground bullies. I'm going to show you how to stop drowning in debt like the 98% of people who are out there, and make money on the markets in exactly the same way as the wealthiest 2% of people in the world. And I'm going to share with you the exact strategy of how to read the markets like a children's comic book. I call it the comic book methodology. And to double your money consistently trading simple shapes, patterns, and colors. Now, guys, this is not get rich quick. I can't, claim to make you millionaires overnight. But what I can do for you is show you a methodology and a system that you can follow for 1 hour an evening. And it's almost a checklist approach to trading. And what that's going to allow you to do is compound whatever capital you have. Like I showed you, you can be starting with £100, €100, $100. But it's about compounding at a very, very small rate each week to grow your capital. So what I need you to do, if you want to take advantage of the free training, www.60minutetraders.com/vision-wealth-secrets. Another reason for, of course, making sure that you've got this in this format is because of that long URL. Now I'm looking at that URL thinking that would have been quite a challenge to give you over a video. So look, www.60minutetraders.com/vision-wealth-secrets. When you go there, you're going to see a specific page. It's a blue page, which I'll come to in a second. Just in case you missed the first couple of videos, here's a real quick rundown of who I am and what I'm going to share with you, and the wealth of experience that I'm going to bring to the table and cut out all the complexity. So I'm Dylan Dunicha. I'm a trader and social investor. I've been stock trading since the late 1990s. I've been trading currencies on spot and on options since 2006. I'm founder of the 60-Minute Trader community. Over 150 students have been trained since May, having remarkable results. And you're going to hear some of the stories of these students on the night. And what I want you to do is to really just take inspiration from these students who are, creating returns on investment as much as 5 or 6% a week until I draw them back in. And certainly when they start on the trading program, 1 or 2% a week, exactly like I showed you on the financial example earlier. So I really want you to take some inspiration from these students. Hopefully we're going to have a few of them live on the session as well. I'm investing myself in the order of £625,000, a little bit more now, in the East African community. And what that is about is taking young entrepreneurs who have got business ideas, chili plantations, bicycle factories, paper bag factories, sewing schools, all kinds of different business ideas, and giving them the seed capital of £12,500 to £15,000 each. So we've got 50 entrepreneurs, in order that they can lift their communities out of poverty permanently. I've been massively, massively humbled to give a TED talk about this economic blueprint, and also to have met some incredible mentors like John DeMartini, share the economic blueprint with ministers and vice presidents and key players across Africa at events like Digital Africa Summit. This is what I love. Getting my sleeves rolled up and getting out there, working with the guys and girls who are going to be tomorrow's future. As I said, the TED Talk was just fantastic. Been featured by the BBC, was featured in Forbes and in the Independent on Sunday Money section for activities in online trading and how we were lifting the gloomy economy after the last bust. So I'm going to bring a ton of experience to the table for you. So if you go to www.60minutetrader.com/vision-wealth-secrets, it's Tuesday, March the 11th at 7:30 p.m. So it's this Tuesday. I'm recording this video for you on Friday morning. So by the time you get this video, there's going to be very little time. So do make sure you reserve a seat quickly. We do have limited spots in the GoToWebinar room that we have. So www.60minutetrader.com/vision-wealth-secrets, Tuesday, March the 11th at 7:30 p.m. That's London time, guys. So it's 7:30 p.m. London time on Tuesday, March the 11th. www.60minutetrader.com/vision-wealth-secrets. Cannot wait to see you there. And come armed, ready with questions. It's going to be a really, really interactive session, and I'm going to just pump out a ton of knowledge, a ton of methodologies, and give you that step-by-step structured process to how to protect yourself in the coming economic cycle. Ladies and gentlemen, that's all for this afternoon, or this morning, or this evening, whenever you're listening to this. Love you all very much. I look forward to the session on Tuesday.